Good evening. This is Tom Alexander. It is Thursday, December 19th, and this is my third consecutive stock market special update. I don't think I've ever done three consecutive special updates before, but this is a situation that I think merits it. I think we're on the cusp of, I think we're at an inflection point from a market structure perspective, a technical perspective. Seasonally, this is a very positive time of year, supposed to be. We're coming off of a panic sell day yesterday. Today was sort of a digestion day, but it turned very weak into the close. We're at or above critical levels in the indices. We have some extremes in the indices that are extreme. And I'm looking for a low in here, frankly. Let's take a look at what we have here today. So I'm going to be a little all over the place this evening, so just bear with me. This is the New York Composite. Now, this is not one of the primary U.S. trading indices, but it is a major U.S. trading index. It's a broad index of all stocks listed on the NYSE, and it has been down now 10 out of the last 11 days, 11 out of the last 12 days. I forget which it is. Everybody is aware of the Dow. The Dow actually closed higher today, but it has been down. It has closed lower 9 out of the last 10 days. You can see it barely closed higher today. It closed on its low for the day. And since this high, we're down about 6%. The next level in the Dow of significance from a market structure auction market perspective is down here around 41,780, 41,67. Now, I said yesterday, and you can go back and listen to that report that I sent out yesterday. You can go to the website, alexandertrading.com, click on weekly updates. You'll see the special report I did yesterday, as well as a lot of other reports. But the report I did yesterday, in that report, I suggested that I thought we were near a low time-wise, and I still think that. Now, that does not preclude further downside here, but we're at levels or just above levels that, if I'm right, should hold. And this is one in the Dow right here. Now, in the SPX, I'm going to switch over here to this view, and I'll come back to that chart. I'll talk about it. This kills a couple of birds with one stone. So VIX, let's talk about VIX a minute. VIX had the highest percentage spike in its history yesterday, almost to 28. Today it came in some, but it was still elevated at 24. This typically happens around lows when you have spikes in VIX. Now, the levels you see highlighted on the chart are the levels of importance. Now, one of my pet peeves are all the gurus on X that post 17 different levels every single day. Something's got to get hit, right? But in this particular instance, there's meaning behind these levels. First of all, back to the upside is today's cash high. To the downside, it's this ledge here. We're sort of in an elevator shaft already, but you really fall off into the elevator shaft, into this gap that extends down to the close of the fifth, which is 57.82. And then if somehow we get through there, this level, I'd have a hard time believing we don't get a bounce. I think we'll get a bounce before this level, but especially if we reach this level, uh, we're either going to bounce or we're going to crash. And in either case, there's going to be a really good rally, but be that as it may, I don't think we're going to crash here. This is sort of a waterfall decline we're in. Now, from this level, let's just do this for fun, just for perspective. We're just above this level to the next level below. We're talking about 1.43, and then down to here, the midpoint is another 3% lower. So this would be a pretty significant move. If this is going to occur, though, prior to a huge face-ripping bungee jump rally, I think it will occur soon. So I think if we don't see a low by noon Monday, I will be surprised. Now, again, I've been surprised before. But this is setting up. We have some extremes here that are pretty reliable, especially in bull markets. If we are in a bull market, I am really confident we're about to see a low. If we're in a bear market, I still think we're putting in a low of significance, but there could be somewhat of a surprise to the downside first. So we had our first negative 2000 breadth reading since last August, early August. This is typical of bull markets. You typically don't get negative 2000 breadth readings, but every few months in bull markets, in bear markets, as you can see back over here, you get them quite frequently. Okay. Now, coincident with this negative 2000 breadth reading, and I alluded to this in the special report I did 2 days ago that you can also access from the website if you care to go back. Um, we have the 10-day moving average of breadth is the most negative it's been in a long, long, long time. The last time it was this negative was right here. And let's see what was going on then. And this was near the end of the quote unquote bear market of 2022. Now, the market did go a little bit lower, but not a whole lot lower. And then before this, you have to go all the way back to 2020, which I'm not going to do right now. Uh, so these things are all lining up for what I think is going to be a potentially significant low, at least a low that has some sort of a multi-percentage rally back towards the highs. I would not, at this point, I would not be surprised once that low is in place to see higher highs, higher all-time highs in one or more of the indices prior to another sharp decline. So I am looking for a low in here. We are just above levels, structural levels. We have the technical conditions setting up. Breadth has been negative, I think 12 out of the past 14 sessions. That's really unusual. So at a minimum, this is, in my mind, this is not a time to be pressing the downside. If you're short in here, you're looking for something that's very rare, and that is an outright 2020-like crash. So barring that, I think time-wise, we're very close to a low, and we're certainly a whole lot closer price-wise, if I'm right, than we were 2 days ago. You guys have a good evening. My next update will be Sunday evening, and maybe we'll get some clarity tomorrow. Now, the sign, this is important. Almost forgot. How do you know this low is in place, or what are the signs? Well, you're going to get some sort of a buying tail. It should be rather dramatic. It should be something like this. Now, this did not take out this low, but you just had this ripping rally to the upside. This is a buying tail, a very significant buying tail. You gap down, traded lower, then closed midpoint, straight up from there. Similar situation here. You know, these lows tend to be spike lows that you're looking for. I don't think we'll build a balance area and then break out of the balance area. What I'm looking for, the ideal is maybe, you know, we gap down tomorrow, for instance, we trade lower into 11 o'clock and then we go straight back up. But if we take out today's cash session high, then that low is likely in place. Okay, you guys have a good evening and check back in on Sunday. I'll speak with you again soon.